Okay, folks, welcome to Market Wrap for the 12th. I'm sorry I couldn't do a Market Wrap today because I went to the gym around lunchtime, came back, and I just got this crazy. I don't get migraines, but it felt like a migraine was ripping through the left side of my eye. So 4 o'clock hit. I just uh, went to bed, and I just woke up now. So again, my apologies. It would have been a good day to have that conversation. So we'll have it now. All right. So this morning we had the NFIB Small Business Index come out. That was a sentiment index that missed. I'm not seeing much in results for other reports for whatever reason. Tomorrow, CPI data out tomorrow. Huge number. We also get the FOMC minutes. So in a way, it's kind of good that we really didn't do much today. We did put on the DPZ, Domino's Pizza Strangle trade, but that's more of a neutral play. So let's get to the charts. All right. So the TNX, the 10-year bond note, yield. You're going to have to forgive me tonight, folks. I'm a little bit out of it. The 10-year yield rolled over. One day does not make a trend, obviously, but we did come in a bit. And yesterday was flat, and I chalked that up to being the holiday. But today, with the immediate reversal off of that high, that leads me to believe that this may be a very short-term high on yields. To the 20-year bond ETF, well, that rallied. I was looking for support down here at 140.66. We did hit one support level at around 144 yesterday, and today a gap up higher. On volume, no less. Really good volume today. Stokes looking very good. The tips, they broke out today. So we have a daily breakout on tips. Inflation fears are running rampant. I just went over Zero Hedge to see what article I may want to talk about. It seems like every other article is about inflation and other articles about the vaccine mandates, and it's just absolutely crazy. RSI, higher lows. Stokes looking really good. We were worried about a potential rollover last night. We were looking for a pop-up higher. We got the pop-up higher. Volume was good, about average. We'll take it. The dollar, strong. A new 52-week high today. A little bit of topping action, but there's more room to run here. Volume was not bad. It was just slightly below average. And you'll note it was another day of gold and the gold stocks moving up higher in the face of a rising U.S. dollar. That trend continues. We spoke about that over the weekend. The VIX closed off the lows and highs of the day. Higher lows on Stokes. We held the rising lower band of support and we popped off of it. The Dow Transports up nearly a percentage point. New daily high. Volume light. Stokes looking good. So the transports looking okay. The S&P 500 not so okay. Rolling over, lower highs. The trend continues. We broke down, continuation breakdown today. Volume rose versus yesterday, was below average. Remember, yesterday was a holiday. The Dow Jones daily chart, very similar to the S&P 500 in that it broke down to new daily lows. It closed down below its 20-period moving average. Volume rose above average. Not good. So we have a bit of a divergence with the Dow Jones versus the Dow Industrials. We have a bit of a divergence between the Dow Industrials versus the transports. You'd want to see them trade in tandem. That's the Dow theory. The Qs. Daily chart, very similar to the other indexes, new daily lows. We closed down on volume. And I wanted to spend a moment here talking about all of these charts so far, except for the transports and the bond market. We rallied in the morning. We faded it into the afternoon. Right? We've been seeing that over and over again. These Stokes are rolling over. Rallies tend to fade. Let's not forget about it. They'll probably paint the tape tomorrow morning yet again. Don't get suckered in. IWM closed up over a half percentage point, but we were up nearly a full percentage point on the day before fading. And while this looks like a good day for price action, the Stokes are just a nightmare. We began to break down last night, continuation move lower. RSI hooked up today. So a mixed bag, up volume, horrible. I think what the markets are waiting for here is a decision, not a decision. They're looking for the minutes and, of course, CPI. I think this is going to be a very important CPI report. The banks closed down yet again, nearly a third of a percentage point. This is only going to get worse if yields continue to pull back. Volume rose above average institutional distribution. Technology daily chart. Another lower high on Stokes and on RSI. Price broke down to new daily lows. Volume light. Consumer discretionaries daily chart. An up day, lots of topping action at 184. Up on big volume. Energy daily chart. Up on the day. A new daily low, but we closed off the lows of the session, but we also closed off the highs of the session. Volume a bit above average. MACD histogram losing momentum. Emerging markets down again. New daily low. No compelling reason to go buying here. Price action is no bueno. Volume was very light to the downside, but rose versus yesterday. Again, yesterday was a holiday. Gold. Okay. We are in a very, very tight compression zone here. There's a good chance that we just go ripping up higher. So I was tempted yesterday, not tempted, I attempted to roll down our covered call position on NUGT because we had over 50% profit. A lot of that profit disappeared today. We're still up on the trade, but I'm reluctant to roll that position down. I'm worried about, not worried, I'm hoping for a rally on gold, and I just don't want to get taken out of our gold mining position, at least from the NUGT. I don't have a covered call position on GDXJ. Volume rose versus the prior few days, but still below average. Stokes looking really good, loving this RSI. It's like a hockey stick. The GDXJ daily chart broke out today, folks. Significant breakout. Closing up over 2.5% on big, big volume. The miners are under accumulation. I've been saying that. Stealth accumulation since last week. Nugget closed up over, or nearly 3.75%. No breakout here. We're still stuck at resistance. Volume was very good. Silver, an okay day, but we did close off the highs of the session. We're consolidating. Volume, light. The silver miners, up over 2.33%. Really nice price action here. And you'll remember last night I was talking about these hammer formations on the price of the miners, both gold and silver. I had warned that while it looks to be a bearish candlestick, the volume was light, and we've seen this before. We've seen this story before, in particular on NUGT, where we get a very bearish candlestick, and all of a sudden next day it just gaps up higher. So watch the volume, very, very important. Look at yesterday's volume relative to the accumulation days we've seen of late. Very muted down volume with lots of accumulation. Gold money, down on the day, not much to talk about here. Cal-Maine Foods, a good day, closed slightly off the highs of the day. 35 is resistance. We may go adding more here. I'd like to wait until these Stokes really settle out. I want to keep an eye on the weekly chart. How do we close out the week? To our energy plays, OPTT up 3.5% on the day. Good. No new daily low. Yesterday and the day prior were bearish days. Volume was light. ETRN, daily chart. Bullish key reversal bar on the day. Very nice. Up over 0.75 percentage point. Volume is okay. Domino's Pizza, Okay, so we opened up this trade today. It was a strangle trade, and if you're new and you didn't get an alert for this trade, that means that you're not a member of the Slack forum and you haven't subscribed yet to the options selling channel. So if you need an invite to the Slack channel, send me an email, Robert at the Contrarian Trader. Let me know you need access. And if you have access and yet you didn't get that alert, that means that you're not subscribed to the options selling channel. Just go to that channel, subscribe, and you'll get some notifications. You need to have the application, Slack application, on your phone or on your desktop. So we sold to open the 505 strikes. Why did I choose that strike point? It's because you have a lot of resistance above that mark, and the probabilities of expiring worthless are very high. Why did I sell the 450 strike? Well, that's where we have a support, and we have a very high probability that we will not hit that support level. So great risk reward. The implied volatility or the price of the options historically are very, very expensive. They will revert to the mean ultimately. So we're going to take advantage of that. We have taken advantage of it. And once those options reprice and go back to normal, well, we have a profit. Those options expire worthless on Friday. If we see elevated implied volatility moving into next week, we'll do the same thing over and over again. Rinse, wash, repeat. And that's the cash flow strategy. Coinbase. We booked profits on Coinbase yesterday. Thank goodness we did. So it's pulled in a little bit here. We may buy the pullback. Technically, we did hit a support level, I believe. Let's validate that. Yes, we did. So let's see whether or not we hold this. If so, maybe we'll re-enter at a lower price than where we exited. With that, folks, have a great night, and I'll talk to you tomorrow. Be well.